The news this week for the financial markets was on inflation and roaring kitty. This is Jeffrey Kerr Financial Group. Today's Friday, May 17, 2024. I have some interesting numbers on the inflation front I want to share, and then we'll touch upon the meme stocks and that whole phenomena. But first of all, on inflation, the CPI was up and in line with expectations, but some of the components of it are really alarming. For example, car insurance is up 22% year over year. Transportation inflation, I'm not sure what exactly that means. Maybe it's gasoline, up 11%. Hospital services up 7.7. Car repair 7.6. Homeowner inflation, not sure how that's measured, but 5.8%. Rent inflation 5.4%. Electricity 5.1. Food away from home 4.1. Maybe food away from home is not a necessity, but it seems like electricity, gasoline, car insurance, hospital services, pretty vital to our everyday lives. So the key to this is that the affordability is getting worse and getting harder for the average American. Inflation, the CPI report is above 3% for now 3 years. So what's this all mean other than that there's a lot of people hurting in our society and culture is that inflation is likely to remain higher, and that is going to make it harder for the Fed to cut interest rates. And the importance of that is the financial markets, and especially the stock market, rallies. And when it rallies, one of the key components is expectations of a Fed interest rate cuts later this year. And right now, there's two expected. So if inflation stays high, can they cut? I think that's, again, it's a risk that's out there. Does that mean the stock market's going to fall in the next week or sell off right now? No, probably not. But it's something to keep in mind that maybe the Fed cannot cut interest rates. Roaring kitty and the meme stocks. GameStop has fallen apart from the traded in the 60s earlier this week. It closed, I think, on Wednesday in the mid to low 40s, and this morning it was trading at 22. So I think one of the things out there is, one of the things I take away from it is, it's how does that fundamentally GameStop is a troubled company. So, how do you end up? And I think people who went long GameStop probably got hurt, and the short sellers got hurt. So how do you end up? I think important part is to kind of know your strengths and have a process. Now, whether that process is algorithmic or just looking at charts or trying to scalp trades, but I think it points to understanding what your strengths and weaknesses are as an investor and trying to stick to those to that process, and hopefully you have some success. So thank you for listening. Have a great weekend, and we'll talk on Monday. Thank you again.